Good afternoon. This is Tom Alexander. It is Saturday, May 7th. It is about 4:20 p.m. Eastern Time in beautiful Charleston, South Carolina. And we have, this is the addendum to the weekly written report that I send out that all of you should be getting. If you're not getting it, send me an email, tom@alexandertrading.com, and I'll put you on the list. Do me a favor, if you find value in the video, please like it. Please subscribe and hit the notification bell, and you will be updated when I send out an update. Okay, stock index futures are sort of, it's Groundhog Day. We're in suspended animation. The stock index future, the stock indices, not just the stock index futures, but the stock indices have been hovering around present levels, and these levels have been tested numerous times really since last July, and I'm going to dig a little bit deeper into that. Let me show the charts here real quickly. So what you're looking at here, these are the weekly charts, the cash charts of the four primary U.S. indices, the S&P, the Russell, the NASDAQ, and the Dow. I've had these levels highlighted in the report for weeks, and they've been discussed as critically important. And I have said more than once, we're going to move sharply away from this area. And we have, and then we move back to it, and we move away from it, and we move back to it. So we've had no traction away from this area for 2 months. I think it's coming. Now, it's, you know, this is an interesting time to be a trader, and don't confuse trading with narrative. You're increasingly, I'm seeing all the magicians come out of the woodwork with all sorts of magic and proclamations about the exact number the Dow is going to trade, or the S&P is going to trade to, up, down, wild ranges among those guesses. And that's not really tradable information. Here's the bottom line. Unless last week's highs are exceeded by all four of the stock index futures, you can make the assumption we're in a bear trend. We're in a bear market, or at least a strong bear trend. That's the bottom line. Now, I do think that because we keep teasing and flirting with these levels, that eventually you're going to scream away from these levels, up or down. It could be down, it could be up. No one knows, trust me. But something objective, if it's going to be up, we have to trade above last week's, we have to close above last week's highs. Now, this can be fine-tuned if you're an intraday trader. We do all that stuff in the live trade room, but for the sake of sort of a 64,000 foot view of this thing, you know, we're at this inflection point that we have visited several times over 10 months or so, and the market is going net nowhere. Let's take a look. These are the weekly levels. These levels are critically important, and I'm going to come back to this in a minute. We're going to spend some more time on these levels, but I want to do that at the end of the video because it's going to take a little time. Let's look at, okay, here are the daily indices. Now, if you look at this, there are divergences among and between the indices all over the place, as recent as Friday's low. Now, that could be bullish, but it might not be. And the easy way to know is simply to follow the price action. If all four of the indices now on Monday during the cash session take out Friday session lows, you better respect that. On the other hand, if we have this ripping rally and then next week at some point close above last week's highs, that's bullish. In the meantime, if we don't go down on Monday, Tuesday, and we establish some sort of balance area, then we can fine tune the range. But it's as simple as this. We're, you know, just follow the price action, try to stay out of the narrative. There are a million narratives going on. You have the fundamental narrative with interest rates, you have the exogenous narrative of the Ukraine, Russia, all of these things coming together in this boil and roil of narrative. Just trade price action. You'll be much, much better off if you do that. Okay, let's take a look at the profile view and see what it tells us. And what it tells us is that the migration of value is down. And it also tells us that it takes a close, which not coincidentally would be above last week's high, is needed to restore any bullish scenario. That's the bottom line. That's all you need to know. That's the salient takeaway from all the market profile analysis you want to do. Okay, let's look at technicals. Okay, here's the technical situation. I will point out once again that we have these clusters of negative 2000 breadth readings that are increasingly frequent, and that is a marker of a bear trend. This suggests to me, as does market structure and where we are from a structural perspective, that we're going to get this extremely sharp move that's going to either clear the air to the downside, we're going to get a washout, and then we'll get some huge rally, or we begin a huge rally next week. I don't know how much longer we can linger around these levels without some sort of sharp move that lasts more than, say, a day and a half. Now, I can go through this. There are potentially bullish divergences between price and breadth. That's correlation, not causation. But all it would take to erase that bullish divergence would be a couple of really strong down days. Then it's not so bullish anymore. All right, let's go back to this weekly chart because I want to spend some time. And I did this a few weeks ago, but I'm going to do it again because I think it's important. If I can find the right charts. Okay, here are the weekly, it's the daily. Here we go. Now, this is what I want to show. Okay, so these levels, as simple as it seems, all you need to know, you do not want to be long below about, at this point, 4164. I was using 4,300. Well, we've broken below that. Now we're flirting with this level. So you don't want to be long below 4164. You don't want to be short above last week's high. That's the bottom line. Now, what about this level, though? Something has to give. You have to learn to respect these levels. I've been trading 37 years, and if I had done nothing over my 37-year career except honor the levels, which I haven't always done, I'd be a lot wealthier than I am. And my life would have been a whole lot simpler as well. Okay, so here's a level, right? This was in August of 2019. And we rallied off strongly, tested, traded higher, and then had this furious decline. This is the March 2020 decline. Now, remember, this is a 20-week chart. So you can see how rapid this decline was. But this was a level that had to be honored. We come over here. Here's a level. I'm not going to get in a fight with these lines today. Right here, this balance area. So this was a level. And you came down, you tested, you flirted with it, and then you cratered, and then eventually traded back above it. So if the level that we're trading at, which we're trading now, is broken to the downside, it will become an important upper key reference area. This was an important level. You can see it got tested here, balance, and then the bottom fell out. Let's go further back. This was an important level, and you can see the market spiked below it, traded up, spiked below it, traded higher, couldn't get below it, and ripped higher. And before this level, you had this level, this balance area. And this is something else that we could be in the process of forming, or we may form before this thing rips one way or the other, is this balance area. So here's a balance area. You can see it came down into this selling tail. This was, by the way, this was in 2015. And this was following this mind-numbing grind that lasted for months. And this level finally broke very sharply. Then you formed balance up here, then you formed another level, et cetera. Let me find some more. this level. The point of this is, and I could go back to as far as I have data, which is decades, and show you the same thing over and over again. You have to honor these levels. I don't care what the narrative is. I don't care what magic you're using. Honor the levels. And right now, nobody knows what's going to happen. But a lot of people are saying they do, but they don't. They don't know. But it boils down to this. Are we going to be able to recapture last week's highs or not? And if we're not, we're going lower to one degree or another. Now, if it gets super vertical, then we will bring in other tools to help us guess a low. But if this thing gets going to the downside, it could really wash out. It could be something similar to what we saw in March of 2020. Guys, have a wonderful weekend. And if something dramatic happens next week, I will send out another update. Have a great weekend.